Hello everyone and welcome to the latest Trader Talks episode, where today we are going to focus on Nebius. Please do remember to like, share, subscribe, drop a comment. Let me know what you want me to focus on next. If you are on YouTube and if you're on the podcast, the link is in the bio to go through all of that. We're going to talk about their recent jump yesterday following their earnings release. Incredible move. And we know someone certainly will not be happy with that, Michael Burry. A quick look at the disclaimer. Do remember that the presentation is for educational purposes only, should not be taken as investment advice, personal recommendation, or an offer of or solicitation to buy or sell any financial instrument. So quickly, before we have a look at the chart, what happened? Well, they surged over 34% yesterday. After quarter two results were very good. Volume was roughly 3 times its recent average. Revenue rose over 450% year over year to 582 million, and that was above the 571 million consensus. So good beat there. Their adjusted EBITDA reached 236 million, which was well above the 169 estimate. So really blew a lot of estimates out of the water. But the AI cloud growth revenue as well, that was 514% higher to 575 million. A big beat there, and 4 major deals averaged more than 1 billion each. Management also held its 2026 outlook and importantly raised its year-end contracted power target to 5 gigawatts as well there. Michael Burry, as I mentioned, is famously short this name, and when we look at the chart, the technical analysis view, you can see why he's not going to be too pretty. We've talked actually about this stock numerous times on a webinar that we do every Monday with our diamond clients, and we had highlighted a few weeks ago just the importance of this previous all-time high at $140. And for those people that got in at that level, you're obviously very, very happy now. And then before the earnings, we talked about the importance of 229. And I was saying to people on Monday, this is a really big gauge. Basically, by the time we get to Wednesday, Thursday, where do we finish those days? Above 229, the bulls are banging control and we can start pushing to that all-time high. Below there, and it finds resistance again, really and truly, you would probably start to see price back towards 180. So straight away, good win for the bulls. I'm really like how this particular chart has traded, just how it's respected technical levels, and that gives me a little bit more confidence in potentially picking targets or areas of resistance coming up. Now, naturally, after a 34% move to the upside, you would expect a bit of profit taking from that. So there's a couple of points and areas to be aware of. If we do push down back to 229, what was resistance could therefore be support for that next push to the upside. And also worth mentioning some levels to the upside, which are going to be crucial. You would have 282 as an important resistance level, but really that comes to a zone where you can see we tried multiple times to sort of close above there for an all-time high. 1, 2, 3, 4, 5, 6, 7 days where it tried to push above 282 and it couldn't. So key resistance level there above that, and you'd imagine there's a little bit more room for it to really run on here. So a couple of options. One would be here for that next move to the upside, a little bit of resistance, breakthrough, something like that. Of course, the other is that it just rejects it. We close the week below 229 and then we start moving back down to 180 as well. But very strong earnings report. You'd favor the move to the upside, I'd imagine, at the moment. Let me know if you agree, if you disagree. But there's a potential couple of opportunities that I think a lot of traders will be looking at, and obviously just be aware of where potential resistance could be, where potential support could be as well, and those key levels, those key lines in the sand, shall we say. But going back, and you see this a lot, just to finish on this, a lot of the time where you have an important previous level of resistance, it breaks through and it finds support once, twice there as well. And what's quite interesting here is just looking also further back, you can see how important these areas of support have been and how well they've been respected. So it was in a range really from sort of September 2025 until it broke out in April this year. but the technical levels have been very well respected so far, and I would expect that to continue. So 229 key line in the sand for the rest of the week, and then 282 to the top. Take care, everyone. Hope you enjoyed that. Let me know what you want me to focus on next. I hope you have a great rest of your day and a good week ahead.